Neeraj, what do you like in the space in China? We've seen that the benchmark yield is down below about 2.5%. Many that we speak to say they still see the Chinese market as being attractive. How does it break down for you?
So overall, we like China, but obviously that's a very broad statement. I would differentiate first between the onshore versus the offshore market. In the offshore dollar credit market, we like selectively some of the investment grade credit in China. In high yield, we like the Chinese high yield real estate as a sector, and within that, the more diversified, the more national level players in the real estate high yield sector. We still like those. I think the risk premium there is actually quite interesting. At the time when some of those businesses have started to come back as the economy is opening up in China. In the onshore market, obviously it's a lot bigger and a lot more diversified. We still like Chinese government bonds. We like the policy banks. We like the better quality SOEs. Selectively, we like some of the corporate credit onshore market in China. So there are ample opportunities in the region. But the key here is, in my view, you still have to focus on quality in terms of building the carry and the income in your portfolio.
Have you changed your thesis at all on India, given the lockdown there and the implications around the spread of the virus? You did, I think the last time we spoke to you, you said you like the government bonds in India and you like certain selective high yield. Do you stick to that?
I would say, first of all, from a macro perspective, I think it's still, certainly India is behind from a COVID spread perspective, and to some extent the lockdown has had meaningful downside impact from a growth standpoint. At a point where the fiscal room is limited, and hence there's obviously a lot of the heavy lifting getting done by the monetary policy. So I would say we remain selective in case of India. The government bonds still actually look attractive. I still think RBI will move further from here in terms of the policy accommodation, in terms of rate cut, as well as overall liquidity side of the equation from a monetary policy standpoint. In terms of credit, I would say we're a little more selective than where I was a couple of months back. But there are opportunities in India in terms of where the spread is in corporate credit.
What about when it comes to sector by sector, Neeraj? You know, airlines obviously getting hit the most, but there is an assumption that they could get bailed out. Do you think some of the big names could actually avoid defaulting?
So I think it's going to vary by country and sector. So to some extent, first of all, in credit markets, the good thing is that you don't have, specifically in Asia, a lot of these sectors which are adversely affected by the whole spread of coronavirus and slowdown of economy. So you don't have a lot of names from airline sector. You have a small composition of the oil and gas and commodity names in the Asian credit. And a lot of the larger oil and gas majors in Asian credit are quasi-sovereigns, which are much more supported by the sovereigns behind them. So I do think that overall impact is less in Asia just by virtue of the composition of the market. And then in terms of where you see bailouts and to some extent in which sectors, I think it will vary by country. So I would struggle to say it is going to be something that you see uniform across the region.